Good evening, everyone, and welcome to this presentation of Wavestone's first half of the 2024-25 fiscal year results. I am Tess Lawrence, Financial Communications Officer at Wavestone, and tonight I am pleased to welcome the co-founder and CEO of Wavestone, Pascal Imbert. Hello, Pascal.
Hello, Tess. Hello to all.
And Laurent Stoupy, CFO of Wavestone. Hello, Laurent.
Hello, Tess. Hello, everybody.
And with that, Laurent, the floor is yours.
Thank you, Tess. For the whole of H1, consolidated revenue amounted to 457.8 million euros, a total increase of 65%. As a reminder, Superior has been consolidated since December 1st, 2023, and Aspirant since February 1st, 2024. On a pro forma basis, calculated as if the acquisitions of Superior and Aspirant in the last fiscal year had taken place on April 1st, 2023, organic growth in H1 was 2%. This benefited from a favorable working day impact of 2%. Lastly, at constant scope and forex basis, the growth was 1%. Let's now look at our operational indicators. The firm's consultant utilization rate showed good resistance at 73% in the first half of the fiscal year. At constant scope, the utilization rate stood at 72% compared to 73% over the whole of the previous fiscal year. Prices experienced some slight erosion over the summer. As a result, the average daily rate was 937 euros in H1, compared to 944 euros in Q1. At constant scope, the average sales price for H1 was 898 euros, stable compared to the previous fiscal year. Regarding business development activity, the order book stood at 3.7 months of work at the end of September, including Superior and Aspirant. At constant scope, the order book stood at 3.4 months at the end of H1 versus 4.1 in March 2024. The change from Q1 to Q2 is a result of the slowdown in order intake that is typically seen over the summer, but also the more conservative behavior of the decision makers of Wavestone clients. Regarding human resources, on September 30th, 2024, the staff turnover rate was 13% on a rolling 12-month basis, including Superior and Aspirant Consulting. This level was identical to that of June 30th, 2024. At constant scope, it stood at 14%, stable compared with the previous fiscal year. Wavestone had 5,875 employees at September 30th, 2024, compared to 5,894 at a year earlier. In addition, we are maintaining a cautious approach to recruitment. Pascal will come back to this later when we discuss the outlook. Let's now look at our financial results for H1 2024-2025. As previously said, Wavestone's revenue grew by 65% over H1, equivalent to 2% organic growth. In terms of profitability, the firm achieved a recurring operating profit of 46.4 million euros, an increase of 26%. Recurring operating margin was 10.1% compared to 13.3% a year earlier, when neither Superior nor Aspirant had been consolidated. Apart from this scope effect, profitability in H1 has been impacted by the firm's usual seasonal effect, but also by the costs related to the integration program between Wavestone and Superior, notably the Together as One event, which brought together most of our teams in Paris in May. Based on recurring operating profit and after taking into account other operating income and expenses and the amortization of customer relationship of 4.4 million euros, of which 3.6 million euros relates to Superior, operating income stood at 41.6 million euros, an increase of 25%. The cost of net financial debt amounted to 1.6 million euros compared to 0.7 a year earlier. This was due to an increase in financial debt as a result of the recent acquisitions. Other financial income and expenses stood at 1.7 million euros over the period, of which 0.6 million euros related to the unwinding of the discount effect of the Superior earnout. The tax expense amounting to 11 million euros, an increase of 19% compared to H1 2023-2024. Net income stood at 27.3 million euros in H1, up 19% compared with the same period of the previous year. As a result, net margin stood at 6% compared to 8.3% a year earlier. On a diluted basis, the earnings per share was 1.11 euros compared to 1.16 euros in H1 last year. As a reminder, approximately 24.9 million shares were outstanding in the first half, compared to 20.2 million in H1 last year. Let's now look at our cash flow statement. On September 30th, 2024, Wavestone's self-financing capacity was 54.3 million euros, an increase of 38% compared to the same period of the previous year. Tax payments were 22.1 million euros compared to 9.8 million euros a year earlier due to the integration of Superior and Wavestone. Changes in the working capital requirement consumed 29.6 million euros of cash in H1. This variation reflects the usual reduction in employee-related liabilities in the first half of the fiscal year, which are linked to paid leaves, payment of bonuses, and profit sharing. This increase in the working capital requirement is also linked to an increase of 5% in the DSO. Lastly, Wavestone generated an operating cash flow of 2.5 million euro in H1, compared to 9.3 million euro in the first half of the previous year. Investment operations consumed 37.8 million euros in H1 2024-2025, including 35 million euros for the payment of the Superior earnout. Lastly, financing flows generated 8.6 million euros. On the balance sheet, you can see that on September 30th, 2024, Wavestone's equity stood at 579.6 million euros. Net financial debt, excluding lease liabilities under IFRS 16, was at 38.5 million euros. This compared with net cash and cash equivalents of 19.3 million euros 6 months earlier. As a reminder, Superior's earnout was paid in the first half of the year. The only remaining earnout is that of Aspirant. Provision for this has been increased to $8 million compared to $6 million previously, reflecting Aspirant's strong performance. I now hand over to Pascal to share Wavestone's latest news and the outlook for the end of the 24-25. Pascal, the floor is yours.
Thank you, Laurent. First, some recent news about the integration program between Wavestone and Superior, which continues to be successful. The priority for the first half of the year was to lay the foundations of the new organization, notably in terms of operational governance, finance, IT, and CSR. Thanks to the proactivity of the teams involved, the integration of operations is also progressing fast. Our teams get along well, and this is the benefits of cooperating. Our sales synergies are growing. As a result, on each side, the credibility is rapidly building up in the new areas of expertise brought by the combination, for instance, in the areas of insurance, SAP, and cybersecurity. The projects sold and delivered jointly represent about 25 million euros in the first half, and this figure is continuing to grow quite rapidly, helping us to cope with the challenging market environment. Let's now discuss the outlook for the end of the 24-25 fiscal year. As we evoked at the end of October, 2024 unfolded differently than expected. The market has been characterized by a lower than anticipated demand for consulting services. And in the second half of the year, instead of the improvement that many had hoped for, we were a little more cautious on our side, but nevertheless, we were betting on a stabilization of the market. And in fact, we are seeing the opposite. The market, in fact, is continuing to harden. Our clients are showing a persistent wait-and-see attitude. They are strictly controlling their investments, and their expenditure on consulting projects are more and more difficult to commit to. Meanwhile, as one should expect, competition has become tougher and tougher. The difficulties previously referenced impact numerous sectors, including banking, industry, particularly the automotive industry, retail, and in France, the public sector, but that's not breaking news. Since the summer, luxury has also joined the list of sectors that are restricting their demand for consulting as a result of the disappointing shape of the Chinese market. As you can see, it's not a very attractive situation, although there are still pockets of resilience in some sectors, such as energy, transport, life sciences, and insurance, and in specific areas, especially cybersecurity, cloud, SAP, and of course, AI. It should also be noted that the period for negotiating higher rates is coming to an end. Pressure on rates is becoming more acute, and we are seeing the stabilization or even the beginnings of the erosion of prices. However, the effect on profitability for the fiscal year will be limited, especially since, on the other hand, salary tensions have eased. In the environment I've just outlined, Wavestone's business activity since September has proved to be slower than what we anticipated. In addition, visibility on projects for the fourth quarter of the fiscal year remains still limited. Indeed, although interest rates are easing, investments remain under pressure, and for the time being, there are no signs of an economic recovery in Europe. The beginning of the 2025 calendar year may therefore prove to be challenging. All these factors are likely to have an impact on Wavestone's revenue, confirming the concern we shared in October. Profitability will also be affected, even though the impact will be partially offset by the cost-saving plan that the firm has implemented. Last point to be comprehensive on this outlook, last point I'd like to mention, despite this unfavorable context, we have decided to maintain our recruitment plan. We are adjusting it and targeting it on the most active sectors and topics that I mentioned before. And we continue to aim for a 3% increase in our fee-earning workforce between March 24 and March 25. Considering the business environment I have just discussed and the lack of visibility, we have decided to adjust our guidance and to set more cautious targets for the 24-25 fiscal year. We are now aiming for stable revenue based on the pro forma 23-24 revenue of 944 million euros. As a reminder, we initially targeted organic growth of 3 to 5%. Regarding profitability, the firm is now aiming for a recurring operating margin of 12.5%, compared with an initial target of over 13%. As a reminder, these objectives, as usual, have been calculated on a constant forex basis and exclude any new acquisition.
Pascal, I will let you conclude.
Yes, thank you very much for attending this video conference. Our next meeting will take place on January. Our next, in fact, publication will take place in January 30th, 2025. We will publish then our Q3 results for the 24-25 fiscal year. Until then, I wish you a very good end of day and a very happy season. Goodbye.
Goodbye. Good evening.